So the thing is that the argument that prices have to come down because we have to get into a place of affordability. When you look at the affordability numbers, a lot of these companies that put out affordability rates and stuff, they have to go off of the census. And the census data is only, even the feds, I looked it up, the feds only have data for Phoenix for 2021.
2021. Yeah.
And so you can't use 2021 data for 2023. Let's face it, our incomes have been rising. And if you even just look at our employment reports, which are public, you can see that even the hourly wages have been growing at around 5% per year, which is about where we would be in housing if you take a long-term 20-year approach and say, okay, well, we were going up 5% per year from 2001 through 2003, and our median price then, if we had continued on that 5%, just slightly greater than the rate of inflation, right? And we continued all the way up till now, we would be very close to what our median cost for a home under 2,500 square feet would be. Now, I could always take that and apply it as well to first-time home buyer homes, which would be like 1,500 square feet or less, you know, but it would be the same. The line looks the same. So frankly, we're just slightly higher than where we would be if we'd had a 5% annual appreciation rate. And now, if you look at our income since 2015, we have overall the average is about 4% a year, but in the last 4 years, it has been 5% a year. And I'm looking at household incomes. I'm also looking at hourly wages that all support that our incomes are coming up. So what I'm thinking is that you could potentially see home values stagnate, maybe go up 3% a year or a boring 5%, but it would just catch up with that line. That long-term line, and then our incomes would come up and get us more into a range. I could see that happen within the next 2 years.
I like that because especially something Alan will always say at the market updates, it should be boring. You want that it's a little bit more predictable in a sense, knowing not much is going on. You help with your flips.
I don't get much work that way. It was really boring in 2015 through 2018. I know. I remember joking around with Tom Ruff at one point that he's like, because we have to write these market updates. And he's like, what are you writing about? I'm like, I don't know. It's boring. What are you writing about? He's like, what we need is a good crisis. You know, that was, frankly, we did not bring that. That was in 2015 and 16. So we didn't bring that into the universe. But the thing is that, you know, when things are uncertain, then the analysts come out. When things are boring, that's when your clients are like, we don't need to listen to Tina right now. It's fine. But you just never know when things are going to get stirred up again.